Welcome to TheoTrade. This is Don Kaufman. August 11th, 2021. Markets, once again, indecisive. How will this indecision actually end in the markets? That's exactly what we're going to cover in this evening's video. S&P's finishing up mildly. 11 handles, not much of a rally. Obviously, the Nasdaq finishing ever so slightly lower. The Dow, the Russell, it's a mixed bag of goods out there. And this is just a wildly bifurcated trade that continues to be all about the dynamics of bonds. Let's actually get to work in this evening's video and actually start with one of the more peculiar areas of the marketplace. So I'm trying to answer the question, when is this kind of indecision of the markets going to end? A few things that I want to point out right up front. All right, so the S&Ps have actually climbed literally to the top of the range. I mean, this is where you start screaming all-time high, and all of the bulls come out of the woodwork. We're extraordinarily close right now to just a full-blown gamma squeeze to the upside. And what that kind of amounts to, and I really want to kind of elaborate on that theme, then we're actually going to talk a little bit about this indecision in the marketplace. But to elaborate on the theme of the gamma squeeze, in effect, what you're in right now is an incredibly, incredibly tight range, okay? That is now what, 2.5 weeks effectively in the making. The longer we stay in this range, and this is the way that, if you will, the market making side of the business think. This is not necessarily the way that retail traders look at trade, but the longer we stay channeling in a very, very tight range, the more risk in the derivative marketplace that accumulates. And I've been talking about this literally day in and day out, right? So the risk just continues to amplify and amplify and amplify. And what risk am I talking about? Listen, if you trade the exact same level inside of the S&Ps, okay, think about like products like the SPX and the SPY and the S&P options on futures, and then you have VIX thrown in there. And by the way, we can go on and on. And even stocks like Apple and, everything that's just channeling effectively back and forth right now, that risk just continues to grow. And that risk is all barreling down on the exact same strikes. So the professional side of the trading community is often net neutral. Like they don't take a lot of delta risk. Okay, they're willing to take a tremendous amount of gamma risk, and gamma risk is the rate of change, obviously, of the delta. Nevertheless, they're trying to kind of neutralize delta, and they neutralize the delta by buying and selling S&P futures. Okay, and often they trade with the dynamic of the marketplace. So we're right here on the upper cusp. But if we go a little bit higher, okay, markets can explode up in our face, right? Why? Again, why? Because there's a proverbial, crap load of risk sitting right here at this level. And sorry to be so graphic about it, but this is tremendous. I mean, you won't see too many times in the marketplace where this much gamma risk is going to accumulate over time. I mean, this is why markets move, right? So not only are markets not moving much, there's no volume in the S&P futures, which actually tells you that the professional side of the business is not offloading that much risk. I mean, one of the craziest things is how many times can you point out in any recent history that we have 1, 2, 3, 4, now 5 consecutive trading sessions with under 1 million contracts in terms of volume. Now, everybody always goes, well, back in the holidays. Oh, come on, man, that doesn't count, right? Real days. And I got to tell you, even on some of those real days, we did more volume than we did today. I mean, I'm looking back here, at lovingly December 29th, there's still more volume. But again, it doesn't matter. People, it's summer trade, it's this, it's that. It's all about gamma risk at this point. That's what you have to recognize. You see a little bit of an uptrend. All I see is gamma risk barreling down on us. And this gets dangerous. And this is where you can explode higher and then turn around and fall flat on our face. It makes the marketplace extraordinarily binary. Now that's something, again, nothing new in there, right? When is this indecision is going to end? The next dynamic to point out, and this is one that really gets me. A lot of people look at the VIX. Unquestionably, the VIX came down. You shouldn't look at the VIX right now. The VIX is 30 days out. Take a look at short-term volatility. This is the volatility. It's like the here and now. One of the things that really kind of resonated with me is the S&Ps closed, at or near like their highs. But volatility actually bid up a little bit. And throughout the course of today's trading session, I was bothered by this all day. So the S&Ps are up, and yet volatility isn't really coming off. Those volatility futures, on a day that the S&Ps are up 11, well, they shouldn't be hanging around, down 30 cents. Throughout the course of the day, the volatility futures, and I just wanted to show this, they were actually up during portions of the day. Now, granted, the S&Ps did threaten to sell off, and they rallied back up. Okay, neither here nor there. The volatility futures are hanging tough at this point, and it's a sign of, the professional world is uneasy. Let's further that. Haven't you looked at the VVIX, the volatility of the volatility index? Ironically, there's a lot of hedging activity going on for a day that's, humdrum. It was like, oh man, whatever, it's the same exact range. And we just, it isn't really the same range though, because we've all got all the way up to the 44, 41. We're starting to hit the edge of, again, where that gamma risk, but that gamma risk, for some reason, they're buying volatility into the market, breaking the highs. Now I'm going to explain why and a little bit about the indecision. It's this bond dynamic. Okay, what we've seen lately, and this is something I was elaborating upon on the weekend update, what we've seen lately, if the bonds have been higher, if the bonds have actually been higher, tech has felt warm and fuzzy. Tech being, Apple and Amazon, everything has felt warm and fuzzy. The second that the bond dynamic changed directions, tech doesn't feel so warm and fuzzy, does it? Okay, this bond dynamic is driving trade. And the second that the bonds started to sell off, if you haven't looked at the XLF lately, okay, you're missing the bigger picture. Want to know what's carrying the S&Ps? And this is an area, I say without unequivocation, this is an area I've actually been bearish in. It's breaking to the upside right now. In fact, when you start to apply auto-expected moves, right? And again, I'm going to apply auto-expected moves. And yeah, I'm working a couple of orders here and there. But when you apply auto-expected moves, what I wanted to show you is the fact that, we actually hit the upper edge of the expected move 3 weeks ago. We smashed expected move last week. Okay, and today we actually closed. We closed outside the expected move. 2 consecutive weeks outside expected move. I would actually look for like a bit of a short-term pullback. Nevertheless, okay, so the dynamic right now, XLF up, okay, and you actually have tech that's kind of fading. Now, with the financials being up, okay, we've actually had energy moving, okay, mildly higher. And again, energy has kind of trailed behind the financials, okay? I would expect energy would have made some more substantial move to the upside. It is absolutely unequivocally dragging behind right now, but in the shorter term, it's got a little bit of a bid under it. All right, onward and upward with this. So the bond trade, okay, what do you look for? The bonds are down, look for tech to actually fade, all right? And tech is, again, just eloquently kind of drifting a little bit lower in the backdrop. But this dynamic is actually keeping us trapped inside of the range. What should we look for moving forward? Volatility. And volatility expressly coming out of the Nasdaq. This is another aspect that I've been just covering incessantly, from video to video. The Nasdaq right now continues to portray substantially more volatility, okay, in the very near term. And this one cannot be stressed enough. Like, if you look at the Nasdaq, in this case, the QQQ, okay, so we're at the QQQ, we're just looking just 2 days out. Just 2 days out. It's still sitting at 15% implied volatility. You're like, oh, who cares, right? Then you look at something like the spiders. Spiders are sitting at 9% volatility. You're telling me the Nasdaq is that much more volatile? The answer is, well, it's supposed to be. Is it actually moving as much as the Nasdaq should? Absolutely not. Okay, you have to at this point feel the fear inside of the Nasdaq. You have to, and if you don't see it, okay, what's going to happen is we're moving in much tighter ranges than the implied volatility is denoting. So what often happens in these situations, we've actually gone back and done quite a bit of research about this. Okay, is that we get these very, very violent bursts. Okay, we're right now approximately 10 to 11 trading sessions into just this. The last big move we had back here was all the way on July 27th. These have been relatively inside trading sessions. You got to look for the Nasdaq to absolutely burst. And when the indecision is going to end, it's going to be based, okay, very, very large part in the Nasdaq. Last but definitely not least, give you a quick update inside of the SPX. In the SPX, on a week-to-week basis, we look at expected move. Now, the expected move, this is something we actually cover in some detail, again, on the weekend update. If I cruise back over to the scratch pad, cruise back down over here, and again, we were talking about bonds, we were talking about, financial exploding higher, on rates, okay? We were back to bond dynamics. It's exactly what we're talking about here today. But what I really wanted to cover over here is the expected move this week, $48 and change, okay? The actual move thus far is negligible. We have, again, had no movement week on the week. I mean, just nothing is going on. You have to fully anticipate. We're headed up here. What's up here? 44.85. We got to head down here, okay? 43.90. Again, I believe this is an incredibly binary move. I don't want to sit here, okay, and qualify and quantify that we're going to explode to the upside or the downside. We all know that there's a tremendous amount of gamma risk in here, which makes me incredibly uneasy. I can see things like the VVIX bidding up. I can see that the volatility futures, they just have not fallen. In fact, the volatility futures, it wouldn't surprise me if they were bid up, okay, when the marketplace reopens here in just a few minutes. All right, the bond dynamic is what is going to trigger the trade. The bond dynamic is what's going to spark the Nasdaq, all right, to get just downright wicked. And again, we expect this indecision to come to an end in the marketplace in literally the next 2 trading sessions. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.